Since day one at Nomad Capitalist, we've said that you need to diversify, not just the usual diversification into different asset classes, some stocks, some bonds, some real estate, but diversifying into different countries as the world changes, different regions of the world, different geographies. And yet some pretty prolific investors say diversification is a sucker's bet. So I'm going to share with you my thoughts today on whether diversification is good or bad. Hi, I'm Andrew Henderson. I'm the author of this book and the founder of Nomad Capitalist, where we help 7- and 8-figure entrepreneurs and investors legally go where you're treated best. Those are the 5 magic words. You can go to nomadcapitalist.com to learn more. Let's talk about diversification. And I came across an article a while ago where I jotted down some notes. Here's a quote from an article on why diversification is bad. It says, "You can never truly get wealthy by diversifying your investments. Wall Street has done a great job of selling the public on this idea of diversifying it because it benefits Wall Street." Mark Cuban says diversification is for idiots. Andrew Carnegie said put all your eggs in one basket and then watch that basket. Warren Buffett has also talked about why diversification just isn't a good idea. And so the article says if you want to create real wealth, learn everything you can about a space and go all in. Now, what do you think about this? I want you to leave a comment below. Here are my thoughts. I do think it's important for people to understand who they are. And so if you're an entrepreneur, be an entrepreneur. So I was helping a gentleman a while back who was running a very successful business, making a couple $1 million a year, but he had all of that money from the last 3 or 4 years just basically parked in the bank account. He said, I'm an entrepreneur, I'm busy, I haven't had the time to figure out where I want to invest. And so for him, he is a classic entrepreneur. He's great at big picture. He's great at execution. In terms of the minutia of investments, he could potentially figure out dollar cost averaging into some mutual funds, stuff like that. But he was looking for a broader investment strategy, and he said, I just haven't gotten around to it. I also know people who are great investors, whether they're in crypto or real estate or day trading, that tell me, I'm a terrible entrepreneur. I try and start businesses because I think, hey, I'm an investor. Why shouldn't I be in business? And it just never works out. They don't have success with it. Now, some people can be both successfully. I would guess that you're probably more one than the other. I think knowing yourself is important and not pushing it. I think that if I'm more of an entrepreneur, I'm going to go all in on running my business or running businesses. And I happen to think as I get a little bit older, building out one business and going all in on that is better than a string of perpetual exits. I've never been a tech guy, so that's a little bit different in the tech space. But for me, having run different businesses, I think that the greatest path to wealth is probably going all in on one thing, building that brand, really building it big. If you're an investor, what do you go all in on? Are you going all in on crypto, all in on trading? Whatever it is, you want to be the best that you can be at that. So I'm all in favor of going all in that regard, because for most people, your income is what funds everything else. That is your wealth building tool. And then you take your money from business, take your money from investments, that goes into perpetuating and propagating more wealth, which is why what we talk about here about legally reducing your taxes by going overseas is so important. The greater your income, the more money you can put into the stuff that will make you money in the long run. Now here's where I think that they're wrong, this idea that diversification is bad. A lot of these ideas where people will say, oh, well, why would you invest in any other country when the United States is so great? This comes, in my mind, from a time when there weren't so many options. Now, what's interesting to me about people who criticize the idea of leaving a Western country because of the high taxes, because of the dwindling freedoms, because of other reasons we talk about here, is that your ancestors, if you're from most Western countries, your ancestors left. If you live in the United States, your ancestors came over 1, 2, 3, 10 generations ago because they didn't like something. They went where they were treated best. And it was probably because there just weren't enough opportunities. Whatever the reasons were, they decided it was a good idea to go somewhere else. And so now people kind of look at that, well, why would you go somewhere else? But since they decided to come through Ellis Island, for example, in the US, times have changed, and you've seen the rise of Asia. You see the up and coming potential in Africa. You see the rise of Latin America. There's so many more places to invest. Eastern Europe has become increasingly attractive, as now many parts of Eastern Europe have more personal freedom than parts of Western Europe and the West in general. They have lower tax rates, for example. If you look at the EU, it is countries like Hungary that are fighting to keep tax rates low among the Western countries, which are the ones who want to tax and spend. And so the world has changed in a very dynamic way. And so perhaps the argument could be made, and I'd be all for this, to say, sell everything you own in your Western country and go all in somewhere else. Do the same thing that your ancestors did. Do the same thing that even my family talked about 25 years ago, where the idea was maybe we could move to New Zealand. And it wasn't about kind of cherry picking from the buffet, as we talk about. It was, we're going all in on New Zealand. If you want to do that, find the place that has the best potential. However, the challenge is that where a lot of the opportunities are for growth are places that may not have been fully tested yet. Once a country becomes super successful, they may not want your money. It may become too expensive. There may be too many taxes and fees. You could have invested in Singapore 10, 20, 30 years ago. You could have done very well. Now, just getting into Singapore, buying real estate, huge transfer taxes. Everything is extremely expensive. Even markets like Hong Kong, those kind of places, people have parked their money. There is a great demand. You want to find the places where there's up and coming potential, which didn't really exist a generation or two ago. It was, hey, look at that huge part of the world that's communist. That part of the world is just, there's nothing going on there. Now it's entirely different and the entire world has opened up. And so to say that diversification is bad assumes that, number one, the American dream, or whatever the dream is where you are, is alive and well, and there are still opportunities. And we've been seeing, by the way, I've been surmising for many years, that you have far less opportunity now in the US. Yes, of course you can start a business. Of course people will still be getting rich. You'll be paying a boatload in taxes to do it. You'll become public enemy number one for some of these liberal politicians and their media. But you can still do it, no doubt. By the way, I have people that I work with from Egypt, from Morocco, from all over Asia, from Colombia, from Argentina, from all over the world. I have people who are making millions of dollars as either investors or entrepreneurs, from Russia, from Ukraine. I mean, they can do it now, and they always have been doing it, but now it's becoming more commonplace. And so, this idea that is the American dream, or is the dream where you are still alive and well, or is the dream dying in a sense because people in other countries now have more opportunities, and therefore, there are people in the U.S. who just were basically being successful and having money because they were born in the U.S. or born in Germany or born wherever. The dynamics of the world are changing to where the United States is no longer, statistically, the best place to be born. So this has to assume that your country remains number one forever, which we simply know isn't true. It also assumes the government in your country is never going to take your stuff, either accidentally or intentionally. I've talked about numerous times my experience just starting out in business. I spent about 6 months in California, had to pay taxes there for part of a year, paid the taxes. One day I wake up, they took money out of my bank account. Now, it was resolved after a lot of fighting, which I presume is perhaps part of their game. They figure some people just won't fight. They just give up, waiting hours and weeks and months trying to get their money back. But the government can come in and they can take your money through their sheer incompetence. You look at the U.S. and things like civil forfeiture laws. Oh, you had some cash. We think you're a criminal. We're taking it. You look at the case we talked about recently where the U.S. came into a safe deposit box facility in Beverly Hills where they thought there was some hanky-panky, as it were, going on. They just took everyone's stuff. And then some guy commented, oh, I was one of the box holders there, and they're trying to work with us. All they need to know is that the money was obtained legally, and send us the documents. Listen, it's your stuff. It's already your stuff, and they just come in and take it. They have no thought that you are the guilty party. They can come in and take your stuff. And what's funny is when people complain about diversification that we suggest, they say, oh, you go to Turkey and you buy an apartment, Erdogan's going to take your apartment. As if Erdogan's sitting around and thinking about taking your apartment, your special apartment, okay? It also assumes that your government will never bail in the banks. I haven't heard of any bail-ins in Singapore. Malaysia, I've had numerous lawyers and other people in positions of power say, the government's not going to let a bank here fail. Now, don't take my advice for that. I'm just passing the word along. But you look at Western countries, they're the ones that are putting in these bail-in provisions where, the bank doesn't work out, we'll just take some of your money and we'll move it around and you'll have less. Cyprus, it's been countries like Greece where you have a hard time accessing your cash. Wouldn't you want to have some diversified money somewhere else in case the financial system shut down temporarily, in case the government limited your access to cash, in case they said that, hey, if you don't do this thing that we want, we're going to limit your access to cash. It also assumes that governments don't tell landlords what they can do. We told you the story about in Spain, the ultimate story, where if you don't rent out the property fast enough for their liking, eventually they can come and take the property, and that is gaining steam there. There certainly are rent control regulations in many Western cities. Many Western cities have shut down Airbnb and things like that as yields have gone down. People turn to vacation rentals to make money. Many Western cities shut that down. You go to Tbilisi, there's a booming business in things like Airbnb because they don't have enough hotels. People have made good money in places like that. There are other markets around the world where maybe the local condo doesn't want Airbnb, as in the case in Colombia, for example. But you can still do it, and the government is actually in favor of it in some places. So you've got governments in some parts of the world where they say, we don't want vacation rentals. We don't want people bringing their money in to make those kind of investments. Or we think landlords shouldn't make too much money. You know, that's been the oldest joke in New York. I mean, rent control for decades, but now there are more and more places that are that have it and that are actually talking about putting it in. And so if I'm an investor in New York or California or Berlin, why do I want my money in a place where the government has so many rules about how I shouldn't be able to make any money on my investment or use my property in the way that I want to use it? That is a problem. So all these assumptions have to be baked into the fact that you shouldn't diversify. My thought is very simple. I left the U.S. for good. I sold my U.S. investments. I do keep some cash in the U.S., which I continue to move out. But do I believe that the U.S. has a place in some people's portfolio? Sure. Now, if you're not an American, you've got to do a lot of estate tax planning. If you are an American, you have to do your own tax planning. There's a lot of things that go into investing in a market like the U.S. or Canada. They make a lot of rules to where it may be better to invest in other places for pure simplicity. But if you want to keep your stuff in your home country, wherever that may be, fine. Why not diversify? Number one, why not make some kind of investment, i.e. Turkey, i.e. in the Caribbean, i.e. in Montenegro or what have you, where you can get a second passport or just a second residence. Why not have a place where you can go and call home? But if something happens, you've got a place to go. If nothing else, you have a vacation home. Maybe you have exposure to a different currency, you have exposure to a different part of the world, you have exposure to a different geopolitics, different whatever. How is that necessarily going to do you anything bad? If you have money in the bank, money in the bank in Singapore, money in the bank in Switzerland, money in the bank in the U.S., what is the big difference? The big difference is the U.S. has a lot more bank failures than those other countries. All right? And so I've never met anyone in Singapore saying, oh my goodness, I went broke because my bank failed here in Singapore. It just doesn't happen. And listen, anything could happen in the future. Don't come knocking at my door if something crazy happens. But the point is, what is the harm of diversification? Because the world is changing. There are not only so many more opportunities. I have a small percentage, very small percentage of my net worth invested in a market like Cambodia. I have different properties that are very small portions. If Cambodia falls apart, I'm not going to even miss it for a minute. In the meantime, I'm collecting a healthy dividend stream. I have access to an uncorrelated market, and I have investments all over the world and different things like that. I want you to be diversified for the simple reason that you cannot rely on any one country anymore, not only because their economics aren't working the same way they did in the 1950s when many of these people were becoming investment. I mean, okay, Mark Cuban is younger. Warren Buffett, who obviously you can't argue with his success, so there's a lot of great respect other than the fact that he wants us all to pay more taxes. Warren Buffett was doing great in the 60s and 70s and the 80s, and we'd say, well, where else would you invest? That's not the case today. Andrew Carnegie, it's a different era. And so accepting the reality of the world and saying, I'm going to be diversified. Listen, if you believe in stocks and that's all you do is stocks, go buy some stocks somewhere else. If you believe in REITs, go get a REIT in Singapore. Go get a REIT in Thailand. Go get a REIT wherever. This is not my financial advice to you, but maybe you just say, okay, I'm going to expand my knowledge of stocks to now the Asian markets, and I'm going to do that. And that could be diversification, but you have to be geographically diversified because who knows what the government's going to do, and even if they don't do anything, their power may be dwindling where you're from. So I think diversification is good, and I think people who say it's bad, perhaps as great of investors as they are, much better than I am in these cases, but as much as they are great investors, they're missing the idea that there are a number of assumptions which I believe can no longer be made. So people ask, Andrew, how do I get the most out of Nomad Capitalist? How do I begin my Nomad Capitalist journey? The first thing people do is they start right where you're at. They watch YouTube, they listen to podcasts, they read articles at nomadcapitalist.com. We've spent years creating thousands of pieces of free content so that you can get the vibe from someone who's actually done this, from someone who's actually been in your shoes. What they'll do next, they'll get a copy of the book. You can find it on Amazon. It costs a few bucks, and while it's not going to give you all the secrets, it's going to, again, give you more of the vibe. You're going to learn a lot of the things that I've learned. You're going to learn some strategies you can employ, and you're going to get a lot further in your journey. From there, if you are the 7 or 8 figure entrepreneur investor, you can go to nomadcapitalist.com. You can click Become a Client. We're pretty busy these days, but we have availability to help a limited number of people who want to create a holistic plan, something that I think is so important. So if you want to do that, go to nomadcapitalist.com, click Become a Client, learn more about how it works and how we can help you.